Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, really nice to be here with you on this Tuesday afternoon, the 24th of October. I'm Nadine Blaney.
And I'm Danny Akuye.
So, you did tell me to wear a green shirt yesterday, didn't you? And it looks as if I've come through by the end of this session.
And naughty me didn't, because we might have got more upside on the market. Look at that, SIBO up almost 0.3% or 3.5 points. And just having a quick check of the ASX 200, looks like it's up 0.2%.
It sure is.
Yeah, or 13 points. So we will take that today, won't we, after all those off days? Yes.
Well, we'll take it, 6,857. But don't forget, we do have the last of the day's trades coming through the local market. So we'll get you across the leaders and laggards when this market settles. So when we were talking about the three themes in the newsroom, Danny, I sort of said a flirtation with some of the, positive momentum, but it does appear as if we'll maintain some of that by the end. Also looming large is Michelle Bullock, so she speaks at 7 p.m.
Yes, absolutely. I'm not sure I'll be watching, but I'm sure there were some people or will be picking up, because clearly it'll be, as I said to the Coop today, is she going to throw any crackers out to the crowd to give us a hint about where she's sitting in a hawkish or dovish mood, basically?
Well, I think Warren Hogan today said that he reckons she'll be pretty hawkish. I mean, we did have that PMI data here locally today,
which wasn't great.
No, it wasn't. All sinking into contractionary territory. So we've got, the composite, the services, and the manufacturing PMI now in contractionary territory. But I did read Warren and listen to the interview, and he was saying, there's still a soft landing scenario at play. But is expecting another hike coming through.
Absolutely. I'm thinking we should set up a Stephen Koukoulas and a Warren Hogan debate in the studio. That could be quite interesting, because obviously Stephen is more in the territory that they really shouldn't be hiking again. So it just shows you a market is still a market. So many different views.
AGMs coming thick and fast, and quarterlies as well from the miners. We had a whole heap of gold miners out today, and don't forget tonight we've got those top tech earnings coming through in the States. Yeah,
which I they're always important, but I think this time around it's even more important, because they have been the stalwarts in terms of keeping S&P up, keeping NASDAQ up, and there's a few technical levels that all those technical people that look at their nice pretty charts are getting worried about, so it's important.
Okay, so look, unfortunately, we put the losing sectors first today, but let's get them out of the way. So the big winners yesterday, consumer staples and healthcare, are those sectors that did weigh on the market the most today. We saw energy rising, and we saw iron ore futures rising. That helped to spur along the miners as well. The financials as well contributed to the positive story overall
a bit of a risk-on rally, one might say, which we haven't seen for a while.
So there you go, BHP Rio Tinto up by 1.7%. And if you're interested in mining stocks, don't forget we've got our next virtual event coming up on Thursday after market close. So we did allude to the fact that we are getting company updates coming
Absolutely.
through.
I had two great conversations today, one from the CFO of Ordinate, which was excellent, and I also just spoke to the CEO of Drone Shield, and it's a bit sad, but they are doing really, really well. So, two great interviews in terms of an AGM update and also a quarterly report. But there were a heap more there, as you've got. I think we spoke to Zip as well.
We did speak with Zip, Regis Healthcare is one of those companies that did well today after updating the market. It said that government revenue as well as occupancy were up. Meagre Cheese still talking about a pretty tough half.
Yeah, a little. I thought it was a little bit. They're expecting a little bit better in terms of pricing, but nevertheless. And Credit Corp, they reaffirmed their downgraded guidance.
Yeah, but really got hit hard last week, didn't
it?
Yeah,
it got absolutely. It was down by 30 plus percent. So yeah, a lot of that US debt ledger that they had bought, they had to write it down. But 35 to 45 million, I think, in earnings they are reaffirming. Ansell, demand is back, but it's really finding that, the market is looking for more growth there.
Still talking about challenging conditions, although they do say that they are winding down all their stock, and they're talking up, their transition in manufacturing that's coming, but not till 2025. So the market's not, I think it hit a 16-month low today. Perseus Mining, I just had a chat with David Novak from Wealthwise Education on the trade today. Now he says Perseus is his favorite gold producer. Oh. It's in Africa. So, I just wrote up a few little stories about these gold, quarterly reports coming out today, and West African Resources was another one. But the cost, the all-in sustaining cost that Perseus is able to get the gold out of the ground for is so much cheaper than it is here in Australia.
Yeah, that's been a real thing for the Aussie miners, hasn't it? The costs have really been hurting them.
But I do encourage you to listen to that episode of The Trade today, because David Novak, he just thinks that Aussie investors are missing out on still a lot of upside to come through when you consider the Aussie gold price and how some of these producers are going. So he weighs in on a few of them on The Trade, and those companies as well, out with updates.
There's so many. Yeah, I'm sorry. I've got my brain is reaching peak explosion today.
Which says a lot coming from this legend. But you had Zip up there, and Zip was the stock of the day on the call today. Rudy Philip Van Dyke from FN Arena joined me, and we also had Philip Pepe from Shaw and Partners. Let's see if they would buy, hold, or sell Zip today.
By today, no, because the outlook for the Aussie consumer, if you're using a Zip or an Afterpay, you are very much in the, what's the opposite of a sweet spot? Interest rates go up.
In the pain period.
Will probably hurt you. You can argue it's 20-year-olds using the payment system, but ultimately it's mum and dad who pick up the bill. If the 20-year-old can't make the payment, I'm generalising. So very good bounce off a very low base. I'm going to call it a hold.
That the share price has been absolutely annihilated. So if it hadn't rallied today, my forecast would be it will rally at some point, because that's what these stocks do, right? But then I think it sort of comes back to what type of market participant are you? And I'm more of the guy. I like to own companies that do more than the occasional rally. I like to look back in 5 or 7, 10 years time and go like, that's a good performer. That's done something like 800-900% over that period. Not it had a few rallies and ultimately, like Meyer, for example, always comes back to the same share price after a few years.
Well, there wasn't a lot of love for Zip, was there? Yeah, we're talking to investors there that really like their cash flows, like their earnings, like their predictability, and it's probably just a little bit too cyclical.
Yeah, okay. Well, let's get a view on markets in general. And for that, a welcome back to the COB, Kyle Rada, who's joining us from Capital.com. Good to see you there. I name dropped you on The Trade. Don't know if you noticed today.
I didn't know.
You're just all over our screens today, Kyle.
He's not watching every day now.
What? Anyhow, okay, markets today. So what do you make of this, slight rally that we saw here locally?
Well, I think it was nothing but a bit of a relief rally after what was a very unexpected text, I suppose, tweet from a fairly eccentric billionaire in a way, or at least certainly outspoken. If you look at the price action last night, 12:45 a.m. our time, everything turned, and that was simply an algo-driven rally after obviously the US 10-year yield was above 5%, albeit briefly, and then sort of set off that rally in equities. For the most part, for me, I think we're sort of seeing a market sort of characterised by a lot of waiting around, and as you alluded to off the top, we've got the earnings results tomorrow, which are going to be massive, not to mention, a couple of days of really big economic data out of the States. And then not only that, we've still got this simmering situation in the Middle East, which although, I guess the narrative last night was that perhaps the prospects for grand incursion have subsided at the margins, the balance of probabilities still suggests that we're going to see an escalation in tensions there. And I don't know if anyone really knows how the second and third order impacts of that will play out. So, we've had a little bit of a bounce, again, probably largely due to some sort of a quirky news last night. But for the time being, I still think we've got this kind of wait and see mode in a market that is, terribly uncertain about the outlook.
It's been a lot like that this year, hasn't it, Kyle? When you were here, we were always focusing on the news about to come out. Okay, China, interesting. The bank, the central bank there, they were in buying ETFs, were they today?
Yeah, they reportedly instructed the sovereign wealth fund to buy equity ETFs, effectively just to put a little bit of a, I guess you could say, support under the market, floor under it, if you will. There wasn't a hugely meaningful move off the back of it, and we still have seen Chinese equities broadly lower for the session, albeit with that sort of rebound that came through after that news. But I mean, for me, it raises sort of a number of very interesting questions as to what the central government is trying to achieve here. And you can see here, this is the China 850, the weekly chart. Effectively, we're seeing a little bit like the ASX 200 A shares over there coming towards a 12-month low. Is, why we're seeing these kind of piecemeal efforts from the central government to sort of, more as I kind of visualize it, sort of hose down spot fires rather than, make any kind of monumental change to policy that may ease financial conditions to a point where we stop sort of worrying about some of the, obviously, vulnerabilities there and systemic risks in the system. I dare say it's probably because they're trying to sort of, obviously deleverage and not, I suppose, fuel that fire, if you will, that they're doing that. But also why there's not sort of greater efforts on the fiscal side to spend a little bit more. And, we go back to a couple of weeks ago where, sentiment was stoked by the fact that we did get reports of some, fairly hefty fiscal spending, deficit funded spending coming through from the central government in order to lift demand. So we saw this today, but again, from my interpretation, it all looks like a central government that is just doing its best to sort of, I suppose, keep the major problems at bay, sort of, again, hose down those kind of spot fires, make sure nothing kind of turns into a serious conflagration while they try to obviously deal with some of these imbalances in other areas of their markets and that sort of restructuring of the economy, which the government seems to have as its sort of long-term objectives. But nevertheless, I mean, it did provide us with a little bit of a flurry, but overall a fairly piecemeal effort, again, just to try and ring fence some of these issues and concerns stemming from the financial markets.
So Kyle, we mentioned the PMI here. But we've got them right around the globe tonight. We've got them happening in Britain, in France, in the Eurozone, in the United States as well. So that will be one key piece of information about how this global economy is traveling. And then that's followed up by the CPI here locally tomorrow. So we've got quite a lot of risk events on the horizon just in the next 24 hours.
Yeah, I mean, the next week I'm sort of filling out, as ones want to do, just a bit of a content calendar, and I'm trying not to look any more than 2 days in advance because it makes me hyperventilate. Effectively, we do have just a massive 5 or 6 days. Look at a 12 hours sort of forward to what you just mentioned there too. You chuck on the ECB, Bank of Canada, and more tech dots on top of that. US GDP data, the advanced read, which is obviously the first for the quarter, which gives us the pulse on what growth did last quarter, and then the PCE index. So it's really, really hefty event risk over the next few days, which is probably part of the reason why we've seen this kind of waiting around going on in the markets just today, and kind of perhaps a little bit of a bounce in risk assets. But I mean, you alluded to the PMI. That's kind of the first major data piece or batch of data that we get for the week, and of course we're going to be checking for that kind of global growth pulse, and we'll probably get a sense of two different stories out of the European and the US data tonight. That Europe is effectively slipping towards something of a recession, that the PMI surveys, both the services and manufacturing, will be consistent with levels that typically herald a recession in the near term. Conversely, though, the US data is expected to show a contraction in both services and manufacturing activity, but one that sort of remains only modestly in contraction, and again is a little bit more consistent with that soft landing narrative, which what we saw today, at least in the Australian data for now. So that'll be really monumental. We'll also be looking at some of those kind of price sub indices too, as to get a bit of a sense as to whether there's some persistent inflation pressures there. But all in all, it's just such a busy 24 hours, busy week or so. So again, markets are going to be one of those situations. It always is this time of the year where we really won't know where to look most of the time.
Okay, and Kyle, I have to ask, so with Bitcoin doing what it's doing, are you searching for that coin jar password, or what's happening?
I've got a mate, if you want to bring him in, that had a USB stick that he left at an ex-girlfriend's house in London and had to fly over there a couple of years ago when it was about $60,000 on, the kind of, I guess, guise of a friendly visit to try and find the thing. Never found it. And I don't want to tell you how much was in there, but it was a lot. So I won't speak too loud because he might break out into tears again, but not for me so much. We certainly saw a surge in client interest though when it went through 31,500, and I guess it's that BlackRock ETF story. But nevertheless, I don't know, maybe it's back in the headlines now. Maybe we're all Bitcoin bulls again.
Yeah, somewhere to hide, hey, when all this risk off is going on and maybe everyone's tired of gold. Hey, Kyle, thank you so much for joining us, and just, I suppose, not too much caffeine as all these results come in.
We'll see you next week, Kyle.
Thanks, guys.
Thank you. From capital.com. You know what else? I've got a little tidbit of information. I'm just looking at the London Open. London cocoa futures are testing a fourth consecutive high. Shrinking demand, not enough to offset a severe downturn in supply. So that is just tragic news ahead of Halloween, isn't it?
Exactly. I think that's actually weather related, that one.
Yeah, but let's hope that if chocolate prices go parabolic, I give up. I'm done. I'm out. See you in 2024.
Between chocolate and caffeine.
Yeah. All right, let's get across the market leader, shall we, Danny?
Yeah, absolutely. So, Linus, interesting. Now,
an update on its Malaysian license. If you see Linus surging or tanking, it's usually something to do with, all the instability. But it looks like this is positive news. Imaging often is sort of in the biggest movers.
Yeah, no, I spoke to them yesterday. So they had those great results, and obviously I think that's a flow through continuing today.
Interesting to see Core Lithium amongst the best players in the lithium space, up by 7%. Perseus Mining in the gold space, as I said, mining in Africa, and Regis Resources gold as well.
I was just looking too, Pilbara looks like that is really bouncing off the bottom too. They had a 15% of its share count was on shorted. So it does look like a few punters have come into those lithium stocks, maybe to give the shorters a hard time.
Okay, laggards, and Weebit Nano is on my list. It's giving up some of the good gains that it's had as of late. Elders, we did have a report coming out from Grain Corp just on its crop, so I don't know if there's any read through there because I'm not seeing any other news really associated with any of these companies that are on the laggards.
No, not at all. Maybe just, it's interesting. Life 360 has continued to have some profit taking, but lots of people like it. So
there you go. Small to mid cap space. Let's see if I can pick
Sunland,
anything out.
They're the developer, aren't they?
They are.
Wow, something good must have happened there. Maybe they didn't go bust like every other developer out there at the moment.
Touche.
Actually, no, I'm wrong. That's really weird. I've actually got, that is so bizarre.
I've got them
down.
Yeah, me too. I've got them.
We might just ignore that one there.
I've actually got them. Yeah, anyways. There you go. Just here's a little bit of a snapshot of those that are lagging in the small to mid cap space. Let's get on to some meatier stuff that we have coming up tonight, and that is Michelle Bullock, the RBA Governor, speaking at 7 p.m. What I think is interesting is that she's doing this tonight.
Yep.
We get the inflation read tomorrow, and then she speaks again the day after.
Absolutely. So clearly, whatever she's going to present, she obviously has some real thoughts around that, she wants to be upfront and open with people. So I'm sure everybody will appreciate that. But of course, it's a big night. We've got Google, Microsoft, 3M, and Coca-Cola. And it'll be interesting to see with Coca-Cola if we hear anything about those weight loss drugs, the GLP-1s.
Interesting.
Because apparently they have been wiping out everybody's appetite for everything. And US PMIs, again, another important read.
Well, I've been cynical about these weight loss drugs, but
they're
maybe
dreadful.
Maybe if chocolate prices spike, I won't have to worry about it anymore anyways. Okay, let's get to tomorrow. So the big one is third quarter inflation here locally. If it comes in hot, could upset the apple cart, will certainly solidify expectations for a rate hike coming through in Melbourne Cup Day.
Yep.
I don't know. I mean, it's you just have to wait for the data.
Yeah,
okay?
absolutely. Who knows which way it'll come? I mean, I think on balance, the fuel prices have been, you know, firmer. So it'll really come down to markets looking for around 0.9 to 1.1% on the trimmed mean. So there's a number for you for around market expectations.
Okay, so we don't need to go through them all, but tomorrow is a big day when it comes to quarterlies. So Alchem, for example, we've got Bramble's quarterly report, we've got Fortescue's quarterly report, Gold Road's quarterly report, we've got a whole heap of AGMs, Boral, GUD, James Hardie. Look, I'm not even scratching the surface here. There's a lot going on the corporate front tomorrow. We've also got Bank of Queensland trading ex-dividend tomorrow as well. Oh my gosh, I'm on the wrong day. That's Thursday.
Thursday, okay.
Tomorrow,
But it's still really
still
busy.
sort of, yeah, you get the idea.
Yeah,
Hello
Beach
World.
Report.
Yeah.
So we've got quarterlies from Ansell, Beach Petroleum. We've got corporate travel AGM.
Woolworths quarterly, I didn't realize that.
Quarterly production from Minres as well. By the looks of it, gosh, we're going to be busy bees.
Okay, well then, you know, on that note, why don't we wrap it up?
Yeah.
Just recap where we saw the final figures come through for this local market.
I don't have a change on the ASX 200. What's
Nor
yours?
do I.
Yeah, so basically ASX 200 closing up almost 12.8 points, which is 6,856.2%. SIBO 200, 3.52 points, or almost 0.3%. So there we go.
So I was just looking to see if we had any early take on these PMIs. I'm not seeing anything locally, but
It's probably the clock changes. They,
right.
they muck up the whole European thing. Normally we'd get them by now, but it's an hour's delayed.
yeah, that's right. We do have the French President Macron, though, heading to Israel. So he has landed in Tel Aviv just to
Macron.
keep you... Macron. Écuyer. We'll leave the French up to you. Normally, you know, being the Canadian, I get a little credit
No,
these
not
days.
my French. It's horrible.
All right.
And on that note, that's probably enough, isn't it? We're verging off into doing languages. Exactly. Time to say goodbye and catch up on all
Au
those
revoir.
great au revoir. Wiedersehen. Yeah, ciao. Okay. Well,